Hello, hello. Greetings, everyone. Welcome back to the Mortgage Q podcast. Now, we have big news this month. The breaking news is refinances are back in the headlines. Refinances rose to 26% of all originations in July, just because mortgage rates dipped by a quarter point.
That's right. According to reports, rate and term refinances surged nearly 70%. This is their strongest run this year. And at the same time, property purchases fell about 10%. It seems like a typical seasonal slowdown, but it still is running 20% ahead of last year.
And here's the kicker. Non-QM lending is on fire. It just hit a record 8.3% share of total originations, which was only 1.4% 5 years ago.
Yes. Hey guys, this is the episode 6 of the Mortgage Q podcast.
I am your host, Jason.
And it's me, your co-host, Sarah.
And today we are breaking it all down and discussing questions like what's driving the refinance comeback, what the seasonal purchase dip really means, and why non-QM's hot streak matters for originators right now.
Jason, let's start with the obvious question. Why did refinances suddenly jump so much?
Good question. It all comes down to rates. The 30-year fix dropped to 6.49%, which was the lowest level we had seen since October 2024. Even that small move, about 0.25%, was enough to wake borrowers up. For someone sitting on a $400,000 loan, that drop can mean saving over $100 a month. Multiply that over the total life of the loan, and that $100 per month compounds to real money.
Right, and people moved quickly. The Mortgage Bankers Association reported that refinance applications made up nearly half of all loan applications in early September.
Exactly. So here's the point for loan officers and originators. Refis are not dead. And what I mean is, no, we are not back to the boom days of 2020, but every time rates dip, it creates a window for us. But borrowers are watching, and they will jump if you are ready with the right conversation. Sarah, let's talk about property purchases. The numbers dipped about 10% in July, but let's not ring the alarm bells. That's just seasonality kicking in.
Exactly. Summer always cools off a bit, and this year is no different. What matters is that purchase demand is still about 20% higher than last year.
So the pipeline isn't drying up. It's just leveling out as we move into late summer and fall. That's normal market behavior, not a red flag.
Jason, the real headline here is non-QM. It hit a record 8.3% of all originations in August. That's a big milestone.
And if you zoom out, the growth is clear. 5 years ago, it was 1.4%. A year ago, 5.6%. Now it's 8.3%. That's not noise. That's steady growth across cycles.
Meanwhile, the product mix is shifting. Conforming loans slipped to 51%, VA loans ticked up to 12%, FHA stayed near 19%. One thing is for sure, non-QM is no longer the oddball product. It's part of the mainstream.
Yep, Sarah. Translation for loan originators. If you're not offering non-QM, you're leaving deals on the table, especially with self-employed borrowers and investors who don't fit the agency box.
So here's the takeaway in plain English. Refis aren't gone. They wake up whenever rates dip. Purchases may be slowing, but they're still stronger than last year. Non-QM is here to stay. It's not a niche. It is not fringe anymore. It has gone mainstream.
And that means versatility is the name of the game. Don't get stuck in one lane. Borrowers are shifting, and the originators who can pivot with them are the ones who keep winning deals.
Before we close out, let's look ahead about refinances.
I have a few questions on my mind. First, if rates continue drifting downward, will refis stay elevated? Or will borrowers treat this like a one-time dip and wait? Second, can non-QM climbing to 10+% of originations become reality? We are already at 8.3%. With increasing self-employed and investor demand, that seems well within reach. And purchases, will they bounce back after seasonality, or could we see continued softness deeper into fall?
I will take a stab. I think refis will stay active. Borrowers will pounce on any further rate relief. Non-QM crossing 10% is possible, especially in markets with high investor activity or ugly tax returns. For purchases, I expect a modest rebound before year-end, although gains will be uneven across geographies.
And to all the loan officers, I just want to say that your edge is in watching these trends. Please don't just react. Use Mortgage Q to stay ahead of the shift, prep for both refi and purchase, and keep non-QM strategies sharp.
Yep.
Sarah, I think we have covered everything.
Yeah, this is all for today's episode. This podcast is educational, not legal or compliance advice. Thanks for listening. We'll be back next week with yet another episode.
This podcast is by Mortgage Q, a platform where AI assists and you decide. See you next week.
Bye, guys.